Good evening, everyone. Wall Street today went from sizzle to fizzle. You may not know it from today's closing numbers, but the Dow was up triple digits, even hitting an all-time intraday high this morning before drifting lower. And there are good reasons why investors bought up stocks. Another round of solid earnings. First-time jobless claims were down by 26,000, and more reassuring words from Federal Reserve Chair Janet Yellen on Capitol Hill. In her second day of testimony to lawmakers, Yellen promised to keep record-low interest rates, quote, right where they are to boost the economy until both housing and the job market do better.
Our objective in monetary policy is to continue to maintain an accommodative monetary policy for as long as necessary to see recovery of the labor market. To a state, it's hard to know exactly how to characterize it quantitatively, but what the Federal Reserve Act calls maximum employment, or we used to call full employment for short, and in many ways we're far from that.
Let's take a look now at how the major averages ended the day on Wall Street. The Dow rose 32 points, but not enough for a new record high. The Nasdaq fell 16, and the S&P was lower by 2 points. Now, over in the bond market, also a volatile day, with the yield on the 10-year Treasury note up a fraction, but still near a 6-month low. So what happened today? Bob Pisani explains.
Stocks started the day strong and ended flat, with small caps again the losers. The day started out well with several positive developments. Central bankers like the Fed's Janet Yellen and the ECB's Mario Draghi both implied they would continue to keep rates low. And several retailers reported very strong sales for April, including teen retailer Zumiez and L Brands. That's the owner of Victoria's Secret. Finally, there was a good open for a tech IPO. Chinese security app company Cheetah Mobile, which priced at the high end of its expected range, it ended up about 1%. It was the first tech IPO in a while. But the problem was again with the volatile new tech and internet stocks. So companies like Workday, FireEye, Facebook, and Amazon were all positive most of the day, and then they faded away late in the afternoon. The Russell 2000 index, a basket of small cap stocks, went from roughly up 1% right after the open to close down 1%. It's near the lows of the year, so with no bottom in sight, traders are expecting the volatility in tech to continue. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Chris Gaffney says there are a lot of positives in the market, and he expects the major averages to be up 8% or more by the end of the year. He's senior market strategist at Everbank Wealth Management. Mr. Gaffney, welcome. Good to have you with us.
Thanks, Tyler. It's nice to be here.
You know, most of our interviews begin with a question, okay, what's your overall outlook and what do you like in the markets? I'm going to turn it another way. What's your overall outlook and what do you not like as an investment? What do you say avoid over the next 12 to 18 months and why?
Right. We think that the market is on a positive tone and will continue to strengthen as we go through the year. We certainly had a rocky start to the markets. But in the second half, we do expect it to continue to recover, and the recovery actually to pick up some steam. I guess it could be called a little Monday morning quarterbacking, but we don't like the tech stocks still. We don't like those momentum stocks. I know a lot of rotation has already occurred out of those stocks, but we still don't trust that sector.
So how do you feel when you hear all this news about Alibaba, for example, going public and a whole bunch of other tech companies? You're feeling to tell your clients stay away from these?
We do, and we typically don't suggest clients go into the IPOs. They're very difficult, and typically they get overpriced on the initial offerings. So we do tell people to stay away from the tech stocks. We think the cyclicals are actually going to start to perform very well as the economy recovers.
When you say so that assumes that you have a fairly sort of optimistic growth outlook for the U.S. economy, number one. When you say cyclicals, give me some categories, or if you prefer, some names of companies in those categories that you would buy here.
Yeah, consumer durables are a category. I can't really share names. We don't get stock specific necessarily. But consumer durables, we think the consumer sector will come back, and that's one category that we think will do well.
Mm-hmm. I understand, Chris, you also like some of the stocks in the emerging markets. Which ones? And how much in your portfolio do you advise clients to have of U.S. and non-U.S. stocks?
Well, we do promote at Everbank Wealth Management a very diversified investment portfolio. The sectors, the emerging markets in particular, Brazil stands out to us. We made a switch into Brazil earlier in the first quarter and believe that it will continue to outperform going forward. It's got great yield differentials. It's got some positive occurrences in an election coming up, and also the World Cup and also the Olympics eventually.
What do you say to investors who really depend on their portfolios for income and specifically have a lot of bonds in their portfolios?
Well, fixed income, we think you should remain allocated into fixed income. We do think that interest rates will start to rise. However, so we shorten the duration in the fixed income sector. But you've got to have the fixed income asset allocation in your portfolio. I know the utilities were down today. We think the utilities are a place to get some, and also some floating rate notes are some investments that actually will perform well as interest rates rise.
All right, Chris Gaffney, thank you very much. Chris is with Everbank Wealth Management in St. Louis.